You ask yourself, why would 3 or 4 commercial banks be short the largest concentrated short position on any commodity traded on the COMEX in silver? Why would Bank of America be short 1 billion ounces of silver? Why in God's green earth would they ever do that? And the answer is certainly, you're talking about, I think, a constant need to hold the price down to fund wars all across the globe. And if you need silver in high-tech weaponry, in aerospace, then certainly you don't want it to be taking off. And when you look at an asset that is so out of whack, it's so out of whack historically, geologically, in every single way, logically, to me, it presents a very, very compelling argument that it should be owned. And I think the best is certainly ahead for silver. Even technically, we're looking at right now on the cusp of breaking out of a many, many year consolidation pattern, and it just popped above it. So, who knows where it goes from here, but certainly I think it is the most undervalued asset and underappreciated asset on the planet.
In a recent discussion with Andy Schectman, it's revealed that silver, historically undervalued, presents a compelling investment opportunity. With evidence showing silver's increasing demand in green and digital applications, coupled with its depletion in nature, Schectman highlights its potential for asymmetric risk-reward. Furthermore, insights into the military-industrial complex's reliance on silver underscore its critical role beyond traditional investment considerations. As silver breaks out of a multi-year consolidation pattern, Schectman suggests that its undervaluation and underappreciation make it one of the most compelling assets in today's market.
Yeah, again, when you take a look at gold, to me, the thing to keep in mind is that it's, I don't know, I guess you could say it's the tortoise, not the hare. It moves slowly and methodically, and you go back to the beginning of the century, go back to 2000. Over the last 24 years, it's appreciated roughly by 7.8% per year, very slowly, very methodically. But a couple of things that I would say as you look at gold that really resonate with me. Number one, in 2019, the most well-funded and well-informed and sophisticated and powerful bank on the planet, the Bank of International Settlements, which is really viewed as the central bank or central bank, reclassified gold as the world's only other tier 1 reserve asset. Now, that's very important to me, because when you realize that really over the last 6 or 7 years, we've seen the central banks of the world, who I would say are not only the most well-funded, but more importantly, the most well-informed traders on the planet, have not only gone on a repatriation spree where they're repatriating all of their gold holdings, both from the New York Fed and the Bank of England, but also on a purchasing spree to where over the last 3 years in particular, the most well-informed traders on the planet have accumulated more gold than at any time in the last 100 years. So I think the most important thing when we talk about gold is that it is important enough to be reclassified the only other tier 1 reserve asset other than dollars or treasuries, and important enough to be accumulated by the central banks at a level we've never seen before. And really, again, a very important topic in this removal of counterparty risk. We've seen a tremendous amount of repatriation of gold from these hubs. And I think that's very, very relevant in the time that we are heading into. And I know that that's a constant theme with Bitcoin as well, is an asset that is not simultaneously someone else's liability. And I think that's very important here, because if the central banks were just buying and leaving it at the Fed and leaving it at the Bank of England, it would have less impact on me. But to see them repatriate it and to have constantly gold and silver being bled dry out of the LBMA and the COMEX and shipping eastward, to me, says a lot about where we are. So again, I think the best is certainly ahead for gold. But, one of the problems that people have with gold is that it moves in a very methodical fashion. It isn't instant gratification, but it has been moving slowly and steadily. And when we look at silver, I mean, I look at an asset, to me, that the phrase that comes to mind is asymmetrical risk reward. And it has maybe the best asymmetrical risk reward position I've ever seen in any asset. And that simply means, what asset can you own that has the lowest downside risk with the greatest upside potential? And when you look at silver, look, it's coming out of the ground right now at a ratio of 7 to 1, silver to gold. And for 5,000 years, that was 16 to 1, the ratio. So it's depleting in nature, and it's found in a form called epithermal, very near the surface, as your skin is epidermal, epithermal meaning it's right near the surface. So the big deposits were found literally decades ago. And so what you see is an asset that is increasing in demand in green and digital applications. It's experienced a renaissance in monetary applications, and yet it is decreasing in nature. In fact, of the 1 billion ounces that came to market last year, roughly only 300 million came from companies that mine silver. The majority of all the silver that came to market came from byproduct mining of other metals that are completely off the radar of anyone looking for silver. They're mining gold or copper or lead or zinc, and they stumble across it, and a little bit of recycling. So it's an asset that is historically, in terms of its price relationship to gold, in terms of its geologic relationship, 5,000 years, it's way out of whack. And I think it might be one of the best investments I've ever seen. And again, at the beginning, I mentioned that to me, silver and gold are wealth, and I believe that to be true about silver, but an asset that is so copiously needed in so many areas. And, it's interesting, too, that the military industrial complex is an interesting topic, and I think it's worth mentioning in silver because, when I saw you at that conference in Vancouver, I had been there the year before, and the year before I had made a comment in my speech that there's roughly 500 ounces of silver in the tip of every Tomahawk cruise missile, and there was a man there that introduced himself to me, and he never really told me what he did. Well, he was there again on this last meeting, and he came up to me and he said, "Listen, I heard you say that last year. Actually, I'm a consultant for the Department of Defense, and I actually worked on the Patriot missile program." And he showed me all sorts of pictures. He said, "Don't worry, this is declassified." He said, "But you're right. There's between 13 and 15 kilograms of silver in the tip of every Tomahawk cruise missile." And I asked myself, why is it that military applications for silver is not listed in the Silver Institute supply demand figure? And you look at the amount of munitions that are being issued across the globe and the military industrial complex that is supplying those munitions, whether it be to the United States or to the Ukraine or wherever it may be. And you ask yourself, why would 3 or 4 commercial banks be short the largest concentrated short position on any commodity traded on the COMEX in silver? Why would Bank of America be short 1 billion ounces of silver? Why in God's green earth would they ever do that? And the answer is certainly, you're talking about, I think, a constant need to hold the price down to fund wars all across the globe. And if you need silver in high-tech weaponry, in aerospace, then certainly you don't want it to be taking off. And when you look at an asset that is so out of whack, it's so out of whack historically, geologically, in every single way, logically, to me, it presents a very, very compelling argument that it should be owned. And I think the best is certainly ahead for silver. Even technically, we're looking at right now on the cusp of breaking out of a many, many year consolidation pattern, and it just popped above it. So, who knows where it goes from here, but certainly I think it is the most undervalued asset and underappreciated asset on the planet.
Continuing his discussion, Andy Schectman sheds light on the geopolitical dynamics surrounding gold and the gradual erosion of the US dollar's reserve status. Highlighting the lead economic advisor's perspective on relinquishing the world reserve status, Schectman emphasizes the significance of understanding gold's role amidst these shifts. He underscores the reclassification of gold as a Tier 1 asset and the substantial buying spree by central banks as compelling evidence of gold's enduring value. Moreover, Schectman's insights into the BRICS nation's strategic approach and the concept of logarithmic decay provide valuable perspectives on the gradual yet significant changes shaping the global economic landscape.
Yeah, I completely agree. And, it's interesting too, Natalie, if you look at the lead economic advisor to the United States government, his name is Jared Bernstein. And Jared has a degree in music and a master's degree in social work. He's the lead economic advisor to the Biden administration. His entire thesis is to lose the world reserve status. It's a privilege we can no longer afford. And he's written reports that were picked up in both the Washington Post and the New York Times on this. One was called Dethrone King Dollar. And when Trump threw tariffs on China, he came out and publicly said, fantastic, maybe now we'll lose the reserve status. So keep that in mind as we go through this. And you're right. I think that it's really very important to try and understand what gold represents, but we go back and we look at the reclassification of it as a tier one asset. We look at the repatriation by the central banks and then their massive buying spree that really started in 2018 and continues through today. So gold, there's something about it, right? And you're right. The BRICS are something I focused on for 4 years. I think it's kind of given me notoriety in this industry. I was saying this 4 years ago. I've done thousands of videos on it, all on this topic. And you're right. I'm a big fan of the term called logarithmic decay. Little by little by little by little by little, then bang, all at once. Kind of like you're going off a cliff.
That's by 1,000 cuts. That's what's happening to the dollar.
That's exactly the way that I look at it. And the people in this country, I think, have become obsessed with instant gratification, and it isn't fast enough. And so, look, this is something that has been done very methodically, and I give the BRICS nations credit.
In today's insightful discussion, we've delved into the slow yet methodical nature of gold's appreciation and the strategic moves of central banks in accumulating this precious metal. Andy Schectman's elucidation on the reclassification of gold as a Tier 1 asset and the increasing demand for silver underscores the importance of diversifying one's portfolio. Additionally, his remarks on the geopolitical implications of losing the US dollar's reserve status provide valuable insights into the evolving global economic landscape. As we navigate these shifts, understanding the historical and geopolitical context becomes paramount.